Hi and welcome back to Cheeky Crypto. Today guys, we're going to be diving down into the charts, taking a look at the price action of ADA to see exactly what's been going on most recently. We're also going to take a look and see if there's any decent patterns that are forming that might actually take us to the upside or the downside so that we can prepare ourselves in either scenario. Guys, as we get into this video, if you find it useful or informative, then do go ahead and hit the like button. I really do appreciate that. If you happen to be new to the channel, then do go ahead and subscribe, tap the bell, select all notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. There's a link in the description down below to our Discord server. If you haven't yet joined us, go ahead and check it out. It's completely free. We are building up a pretty decent community down there. I'm always happy to help each other out, and obviously you can ask us questions. We drop additional technical analysis, etc. in there as well. So why not check it out? It's completely free. Links in the description down below. Right, with all that said, done and out of the way, let's actually jump on down into the desktop and take a look at what's going on here with ADA. Okay guys, so we're going to start with our weekly chart. Obviously, the last few Cardano videos that we spoke about the change in trend. We can see the ABC pullback here after reaching the all-time high of $3.10. And this was an interesting kind of point where actually you can say, you know, it really does look like we've changed trend, right? We are tracking really nice and neatly, you know, with this bull run as a whole, right? Wave 1 was pretty tidy, wave 2 was tidy, wave 3 and wave 4 were tidy, and we got the all-time high with the wave 5. Now, obviously, the wave 5 was incredibly short. It should have actually potentially have gone up much, much higher. Then we saw this really significant pullback with Cardano. Now, this is an interesting thing because it actually has deviated away. It took us down into these really low areas of around that kind of $1. Well, actually, I think it dropped down to a low of 118, I think. I don't know if it's gone any lower than that, but we'll have a look at it on the smaller time frames. And it was quite a significant low point, right? Specifically from those highs of $3.10. And it was actually a bit of a shock to many people to drop down this high or this low. And again, this is pretty much in line with Bitcoin pulling back and pretty much a big shakeout of the entire crypto space. We obviously have started to see that ABC kind of come to completion, and we're moving back to the upside. This means that we are getting a new trend formed. Okay, and you know, at the moment we are tracking for a corrective pattern. Okay, so we have an ABC down. That in itself is corrective, and it's after this impulsive move up. Now we are looking to track an ABC up again short term, as in we look at the ABC move as a corrective pattern, as it's corrective by short term nature. So we are looking to move up with an ABC. The ambition here is to basically take this ABC and turn it into an impulsive move up. Okay, so we have that ABC down and then hopefully a 1 through 5 to the upside. That's kind of the ambition here. Now, obviously, everything is going to be bouncing around. And so what we really want to take a look at is that high area just here with B when we actually pull back down into this lower area where we completed that C wave. And we're just going to draw a fib here for a second because we actually have a tendency to move up to some key areas on these bounces, right? So we pull back down and we're looking to bounce up towards the 618. That would actually take us up towards that $1.92 area. Oh, as you can see, we put the A wave just on top of the 786. We're expecting rejection from this bounce, okay? And what you would actually kind of normally see under these scenarios is you know, potentially that sets a new lower low. Specifically, if you have the A wave, we fail to actually move past the 786 or even the 618, and then you actually go down to lower lows. Now, because we're actually tracking an A wave up, ultimately what it means is you're going to get rejection down into a B wave. That's not a lower low, it's actually going to be a higher low that then actually takes us up into a higher high, higher than our A wave high. So our C wave is actually put right up here towards that $2.76 range. Now, obviously, going above the $2.82 would actually turn it impulsive. Okay, so basically, you can replace the ABC with a 1, 2, 3, and wait for the fourth wave pullback and then a fifth wave high. Okay, so obviously on the thumbnails and stuff, we obviously have these kind of numbers like $10. This is actually based on the trend-based fib, which actually takes the low area of wave 2, the high of 3, the low of 4, shoots us with $11 range. That should have been where our kind of peak was, right? And what we're looking for here is we'll see whether this trend is actually going to be higher than $10. Maybe it's going to go up to those higher numbers, 20, 25. We don't know yet, right? No one actually knows where this is likely to go. But we do have to look at the fundamentals of what's happening in 2022 to kind of give us a bit of a flavor as to what's happened with other projects that have had very similar things occur. And they've gone pretty decent to the upside, right? So once that transactional volume comes in, with all those dApps kind of launching on the ecosystem and it kind of getting a little bit more established as we move into the scalability phase, I think we're going to start to see some pretty interesting kind of trend here actually form out. But it is too soon to definitively say. We were obviously tracking at $11, so a little bit north of that $10 range before this deviation, and this deviation could lead to much bigger gains, right? We obviously have highlighted several key areas on here: $10, $15, $20, $25. It could be absolutely anywhere in that range, and anyone who says definitively it's going up there, they don't know, they're just kind of guessing at that point. And I think it's important that we acknowledge that Cardano has completed an ABC down. This is on the weekly time frame, and therefore we are looking for an ABC up. Okay, that's kind of how it works. Now obviously we don't necessarily know the scale of which this is going to be. We might end up with a really small ABC up and then that continues a downward trend, right? And again, this is obviously being led by Bitcoin, which Bitcoin doesn't know which direction it's going either. The ABC moves on Bitcoin's chart is literally confirming both directions right now. We don't know. We are expecting rejection from the 786 like we have here for Cardano. Those two things are pretty much similar, and it's obviously whether or not we see the wave counts going down or up. And on the case of Bitcoin, it could be either. It's very unclear, and I think that is by design. So here with Cardano, we can see this upward direction, and that's really what we're looking for. Inside this A wave to the upside, we should be looking for another A, B, and C inside of that wave, right? So we know that there's going to be a smaller ABC up, followed by an ABC down, followed by an ABC up, or potentially an impulsive move up, taking that C wave into an impulsive move of itself, right? So lots of things kind of going on this weekly chart that we need to be aware of. Nothing is set in stone, but it is pretty positive, right? And it's positive because we've had to endure the pain already. Okay, we can take a look at that stochastic RSI that's heavily oversold, just coming out of this oversold area. Last time it was in that oversold area, we actually led to the all-time high of $3.10. Okay, so we know that actually coming down into this lower area, as long as we have the buyers behind it, we're actually looking pretty good. And I think we're going to start seeing a pretty good 2022, a good start to it as we complete this A wave before we had that pullback. Okay, so we are not talking about moving this up significantly to the point where we are going to see all-time highs. We are looking to kind of cap this thing out here without that 786 and then pull back down and then push up into, hopefully new all-time highs, but we will see how that one trying to tracks out. Obviously, when we had up here, we were overbought on our stochastic RSI. From there, obviously, you have the natural kind of correction that pulls us back down. So we have to be very aware of that. So overall, this weekly chart's looking very, very good, right? It's important that we actually take a look and really analyze this weekly chart because it is the bigger macro picture. This is the one that actually matters in terms of the bull run, right? We can get lost in the daily, we get lost in the hourly. So much noise going on there, but the weekly chart gives us that good steady picture of where things are going longer term. So as we go into 2022, we go into February, we go into March, this is the chart that you want to be guiding you as to what is going to happen next. Okay, so examples of being heavily overbought here, that last little push to the upside, actually we're in oversold, but then we had that pull back right down into oversold. Okay, so this again was mirroring what Bitcoin was doing at the time. Now what we're going to do is we're going to jump on down. We'll try to keep this video a little bit shorter, and we're going to jump down into our hourly view. I want to talk about the Elliott wave triangle. Okay, there's a little bit of lag here on TradingView, so apologies for that. Always seems to be on some of these charts that are laggier than others. But basically, we had the Elliott wave triangle here. We actually had a false start to this a little bit earlier on. We had the kind of breakout and then the pull back down. So we actually take that pull back down. That begins our A wave B, C, D, E, and then we had the impulsive break. And this impulsive break led to an ABC down. And then we were thinking this was going to follow up with another impulsive move, right? We had the ABC and the C wave actually going impulsive on us. And I'm going to just run you through what that looks like here for a second, right? So here you can see we were expecting this fourth wave pullback to kind of come down onto support of about $1.50. We actually broke that down and we started to see some traction to the upside after. Now, obviously, with an impulsive move like this, this wave 4 cannot cross the high area of wave 1, otherwise it gets invalidated, and that's exactly what's happened with that impulsive move. Okay, so what we're going to do is we're going to turn that back into an ABC move, which is what it is, corrective in its nature, a corrective up move. Here's our A, B, and our C wave. Okay. And again, we can measure out that distance just so you know how we kind of measure what is an impulsive move versus what is a corrective move. Corrective just means short term, and basically you have impulsive slightly longer term. Okay, so here you can see anything that moves past that 1.382, you can assume that it's pretty much going to go impulsive, and you can kind of see that it's impulsive in its nature. It really got a lot of momentum behind it, right? And once you move that past that 1.382, it's not a set rule, but it's a kind of a good kind of way to kind of analyze whether something is going impulsive or not. Obviously, you can see here that if you would expect that fourth wave to come down, not crossing the high area of our A wave. In this case, it did, and validating it. So we now know that that is a definitive A, B, and C. Then what you end up with is this big push down here. This is your A wave. This is your B wave. We're waiting to come down a little bit lower now, completing that C wave. So on the shorter time frames, we can acknowledge that Cardano here is actually looking to pull back. Okay, we are looking to kind of get some kind of pullback on Cardano. So we want to be prepared for that. We're going to go ahead and just grab our fib here. We're going to move it down, and we're just going to rest it on top of the B wave high. And we can see that the C wave actually puts us down to this area just here, about $1.37. Now, why that particular area? So for those who are unfamiliar, ABCs, the A wave and the C wave are usually the same length. Okay, so we measure the distance on the A wave, we drag it over to the top of the B wave, and it gives us a bit of a target to aim for. Obviously, these C waves, they can overextend. Going past the 1.382 is an impulsive move down, as long as it doesn't retrace higher than the A wave, for example, or lower than the A wave, and depending on the direction that you're going in. And sometimes they fall short. Sometimes there's a good strong support line that actually holds out really well. $1.40, for example, might be where it stops. Sometimes it actually stops on the 786 itself. The 786 is an area that resonates incredibly well with Elliott theory, along with the 618 as well. And again, these are really strong areas for us. And again, we can copy these across and see various different levels of support on that journey as well. So right now, we obviously have some interesting levels. Anything around 141, 140 and 137 seems to be the areas of focus on the Cardano pullback that's potentially on the horizon next. Again, we are looking to come down lower than A, but sometimes you actually get a double bottom, which is actually a bullish signal that takes us higher. Therefore, the A wave actually equals the low of the the C wave equals the low of the A wave. It can happen. We've seen it a couple of times recently as well. I think there's actually one somewhere around on this chart, but maybe not. Maybe it's a different chart that I was thinking of. But basically, sometimes you get a really short C wave like that, and then obviously you go up massively as the buyers kind of win over the ground, right? The bulls win. So this is it's not an exact science, but it gives you a bit of an idea, right? In this area is going to be really strong for us, right? We are looking to come down at least to the bottom of an A wave, and of course we are looking to kind of move past the 786, but we will monitor that situation. And then as we come down into the 1-to-1 ratio, that's the most probable area for a C wave to stop. Then from there, we get the reversal. We look for the ABC up. Okay, and again, monitoring how big of an A wave, B wave, and C wave that becomes, we know closer to the time. We don't want to focus too much on the shorter time frame, though. It's important that if we really do want to focus in on the bull run as a whole, it's the weekly chart that really matters. Long term, this is looking very, very good. Definitely don't want to be selling Cardano specifically at the bottom. So if we actually take a look at this, we're actually really low. I think it was on Christmas Day in terms of price, and we've actually moved quite significantly from there. Obviously, you can also look back that we were actually pretty reasonably low priced the week commencing the 13th, week commencing the 20th. Okay, if we actually go ahead and take a look at that on the daily, we can actually go and expand these up. We can see the lowest point was the 17th of December. That was actually a really good low point, really coming in on our trend line. And again, we're pushing up nicely here. Now, if we take a look at some of these days where you might be feeling a bit of the pressure here, you're seeing a bit of a down day here for Cardano. Maybe on the Christmas Eve, for example, we saw lows of about $1.38. Potentially selling, right? But we actually went up much higher. This is because ultimately we are heavily oversold on our weekly chart, right? We want to make sure that we don't succumb to that pressure, sell the bottom when we have so many more gains to kind of be had here. And there are other charts that are actually not looking as favorable as this. So for example, I know a lot of people are potentially piling into Matic, but on the weekly chart, this one's overbought, right? Which is very opposite to what you see with Cardano being oversold. So you have to look at the stochastic RSI, look at the patterns that are forming out here. We are on an ABC up, meaning that there's going to be one pullback inside a larger pullback, that should be said, within that B wave. There'll be an ABC inside the A wave, an ABC inside the B wave, an ABC inside the C wave. So there's a little bit of kind of motion going on in here, but for the most part, the macro trend is up for now. So we definitely want to be riding that to the upside where possible. Guys, I'm going to leave the video there. If you have found it useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then do go ahead and subscribe, tap the bell, select all notifications, and in doing so, you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. With this said, done, and out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.